Another bloodbath in here today, but the 39 level found support at the end of the day. Hasn't really done much since, up about 2%, which is now baby talk with the way things have been moving on lately. Priced in gold, it continued to go lower, and I started tracking this at about 750, went up to 1,000, and that means it went up 33% and pretty much close back down to where it was. And we look at this 39 level. It's extremely massive. In fact, I'm pretty much just as bullish here as I was here. When it came back, actually no, excuse me, here, sorry. When it came down to 25 in 2010, because there was just too many indicators stating it's got to go higher. The first one is this 38.2%. That's from this low here. You got this 50-day moving average. It's the first test since the last test. And the couple other reasons why is this low in here. It's the 61.8% to the downside. On the breakout lows, it's 23.6. So I have four huge factors stating we should have some sort of bounce. Now, very often you can have a bounce and the bear market continues, where it can either be a correction through time, maybe it comes up, tests 45, 46, and then if it comes back down to 39, it just wouldn't be as strong as it is now. And doesn't mean that it will, but it should mean that there's a good chance at it. These are manipulated markets. But even before, these things have worked out well in these manipulated markets. However, if it does not find support, there's definitely a lot of reason to be cautious, because the moves that bring us from 50 to under 40, which is over 20%, would generally happen in a few weeks. Now, intermediate rallies or intermediate trends, I notice, generally last between 3 and 9 weeks. And we have yet to have had an intermediate bear market on the daily time frame. On the short-term time frame, let me just phrase that, because I'm looking at the 50-day moving average. The only intermediate bear market we've had is in here. We have yet to have had a bear market on this chart as of yet. For that to happen, I need to see this roll over and then go towards the downside. Like I say, it could happen now, but the more likely scenario, if this is going to turn into a longer term bear market, is at least a correction through time or a lower high to be established. Now, when making this lower high, if it is a lower high, it's just the odds are high that it is. To continue the upward trend, then it would need to find a higher low, and the 50-day moving average will continue to rise. So if it manages to come up towards there, then it would have to find a higher low to hit the 50-day moving average. But if that doesn't happen and we come back down to 39, you go from having like a 90-something% chance of having good support to maybe a 60 or 50% chance. And then at some point it's going to be under 50% if it's not able to find any sort of bounce whatsoever. Now, in the shorter term, the original trend line that I've been following has not been touched since it broke away from it at the 45 level. A parallel line for this one is pretty obvious now. It wasn't the one I thought of originally. I thought it was going to be this one here, and it can still be one, but I'd rather connect as many key points, and I would use this as the support line for the channel on the current intermediate downtrend. However, we now have this trend line to focus on before we do anything with that one. The parallel line for this one, once again, very tough to determine, but I'd have to put it right on here, which really tells us that there's a potentially more downside target. Yes, we are at this 39 level, so I do like the chances that we take out this one here for now, but it's pretty unlikely that it's going to have a rally that would not make a lower high. Now, as far as these are concerned, you got lower highs, lower highs, lower highs. It can take out this one here. But as far as taking out this one, no. As far as the lower lows are concerned, 1, 2, 3. Well, this one was a higher low. But when you made the higher low, you didn't make a higher high, which really, this was a period of the fall where it had to state, yep, I guess we're kind of done for it, if you will. Because to make a higher high, you would have wanted to have this consolidation period and then break towards the upside, maybe hit the 5-day moving average, come back here, and then go higher. Obviously, that was not the case. So we'll just have to wait and see. I think it's well over 90%. We get some sort of bounce or at least a decent correction through time. Doesn't mean that it will, but 90% plus is pretty high.